Welcome back. We are getting our latest window into the U.S. economy. The November jobs report is out. I was talking about it just a few minutes ago, so we want to dig a little deeper because according to the U.S. Bureau of Labor Statistics, 266,000 jobs were created last month. The numbers are on your screen right now. The unemployment rate, it nudged down a bit. It's now standing at about 3.5%. That is down 0.1% from October. So joining me to talk more about these numbers and the holiday shopping season, Greg DiMarzio from Rockland Trust. Greg, thanks for being with us.
Melody, thanks for having me.
Okay, let's start with the jobs numbers because this wasn't just better than expected. This was a whole lot better than anyone expected, right?
Absolutely. These were really strong numbers. I think some of the worries coming into the year, or as the year developed, was whether or not the macro international data points and some of the things going on in Washington were going to have an effect on jobs, which is 70% of the U.S. economy. Clearly, these numbers show that nothing has yet negatively impacted the jobs numbers. It's very strong. That's
great news for anyone sitting at home going, I don't really care about the jobs numbers. You should, because that is very indicative of our broader economy, correct?
Absolutely. The thing we say over and over again at Rockland Trust is people are 70% of the U.S. economy. As much as we talk about business, people are 70% of the U.S. economy, and the number one thing that dictates how they act is their jobs and whether or not they're employed and making more money than last year. And that's the other key point, is the amount that they made was 3.1% higher than last year, which was an excellent growth rate.
That's great news. Okay, so speaking of how people act, how we spend, and how we feel about the economy, that certainly has an impact on holiday shopping, right? What are you seeing so far in terms of the numbers, and what does this tell you about consumer confidence?
Consumer confidence is very high. You know, there's been some wavering in the last couple of months, but frankly from a very high level, and that's kind of healthy to have that sort of caution in there, but consumer confidence is very high. Holiday spending is off to an exceptionally strong start. It's always hard to judge early because frankly when things happen on that first holiday weekend, Black Friday, Cyber Monday, what we wonder is, did we pull all our spending forward onto that weekend? So we'll wait till the end of the holiday season to judge the entirety, but it's certainly off to a strong start.
Okay, I want to talk to you about something that we haven't been tucking into financial news lately. That is the impeachment hearings of the president. Has that impacted the economy? Because there was a lot of concern going into these impeachment hearings that any volatility when it comes to our, comes to Capitol Hill impacts our bottom line, right? Have you seen the impeachment hearings impact the economy at all?
No, that's a phenomenal question. It has not, and I think that's a question we get a lot from clients and prospects alike, is why isn't the impeachment talk hurting the stock market? And at the end of the day, the stock market follows earnings. Companies follow the trajectory of their earnings. And if you think about the impeachment hearings coming in 2020, at the end of the day, next year, we're going to push forward till the election. That's what we're more concerned about. The impeachment is less likely to have an earnings effect on the economy, regardless of whether or not it happens. So I think the market's doing a nice job of looking past that. And I think as next year comes along, we'll wonder what the election brings.
And that will certainly have an impact.
Absolutely.
As it always does. Gregory DiMarzio, thank you so much for joining us. We appreciate it.
Thank you.